let's think about where we are on this last trading day of the year. What messages we're getting from Asian markets? I mean, Chinese stocks and the Asian market more broadly, not overly impressed with some of the data and the commentary we've had out of China today.
That's right, and good morning, Anna. Yes, bit of a dour end to the year for Chinese equities in the mainland in particular, dribbling lower 1.5% or thereabouts. And it really sort of speaks to this idea that China is going to face a big uphill struggle to convince investors to win over their hearts and minds to invest in Chinese equities. Yes, we have had a positive year for the first time since the pandemic for those gauges. That was mostly two big jumps, right? One in February, one in September, over 20% in September. The rest of the year, flipping backwards and forwards, very unpredictable as well. And so many international investors have just decided to call it a day, to get out and not come back. So many domestic investors are still preferring to put their money in savings or in government bonds and the such like. It's really hard for them to revive that sentiment, to get people excited about the market again. So although we had plenty of good news today. We had some pay rises for civil servants. We had positive services PMIs. We have Xi Jinping telling us that we're going to hit the 5% annual growth target. Still, equities struggling to gain any traction.
So that's of course, the China story. But Paul, I feel like you cover the gambit. What was your biggest takeaway from this year?
Yeah, well, I think looking at it in the rounds, this year is the year of the elections, right? Next year is going to be what people do about it, and most importantly, what Trump does about it in the third week of January at his inauguration. Are we going to see immediate market turmoil, like Brendan was talking about? Is the tariffs a negotiating position? Or are we going to be slapped with them right away? What about the deportations? What's that going to do to market sentiment, to bond yields, to the economy, to the strength of the dollar? How is that going to boomerang back to the rest of Asia's markets as well? So the takeaway is, Trump is back and everybody is revolving everything around that right now, trying to plan ahead and get their ducks aligned for it.
And Paul, just briefly, investors looking to 2025, what do you gauge are the biggest concerns?
Yeah, well, apart from those trade policies, I feel like the bond market is at risk, right? Wobbly at the moment. If Trump does put into place inflationary policies, if there is going to be much more supply of US treasuries as well, the question is, can the market take that down? Will it want to take it down? What yield will we require in order to take it down? Is the Fed going to need to start thinking about raising rates again? How high a yield can the rest of the world tolerate for US treasuries? It could be that we get to a point where suddenly higher bond yields is no longer very supportive for equities, for example. It could be that the strong dollar is particularly pervasive for the rest of the world's markets too. So I think that's the concern people are most focusing on for next year.